Warm welcome to all of you. Thank you so much for joining us. Shalini is there with us along with the other speakers. Shalini, I'd hand it over to you because people think banking is a very non-personalized, very large-scale product that you offer or a service that you offer to people. And personalization in such a huge industry is very, very difficult. What would you like to say? Do you think technology is really helping us increasingly personalize offerings and make the customer feel more welcomed?
Yeah, thank you, Anisha, and thank you, I think, my fellow panelists. I think we've got Tom, Jen, Julie, and Kevin here. It's really wonderful to have everybody, definitely, and I think we are at an amazing age where we can use technology and data and personalize that experience and really customize it to the customer. But it's about how do we find that balance, right, between the human touch and technology. And even in terms of, I think that's what I wanted to pick the brains of the experts that we have in the call today, in terms of even a virtual experience, how do you bring that human touch? And I think that's what we're trying to do. So, I mean, just to, again, I think Anisha really summarized, I think, what we are going to discuss today. But again, the topic for today is reimagining customer experience for banking and financial institutions. A little bit of a background, maybe, there's no doubt that technological capabilities and innovation will be vital to improving customer experiences in financial services. However, I think financial institutions need to invest in technology and talent to remain competitive. But how do we balance technology with empathy to create experiences that still feel personal and as human as possible? So the pre-pandemic trends have continued. We continue to see that. Meeting customers' needs is key. Searching for the optimal value proposition mix of digital and human interactions, again, is really important. So the technological capabilities and innovation will undoubtedly be vital for improving the customer experience. And providers, bankers, and insurance who made early investments in technological and innovation capabilities, we see them leading the way. So in many ways, the future has showed up early with the pandemic. So now those who stand for nothing increasingly stand alone. I mean, I was reading an article in Accenture and I saw this and I thought that was a really great statement. And so banks and insurers need to connect more authentically and emotionally with the communities and individuals that they serve. So functional competence isn't enough to drive human connections and loyalty. Now is the time for us to step up and reimagine this customer experience. So how do we organize our whole business around the delivery of exceptional experiences? How do we rewire the customer-facing functions of the organization, like marketing, commerce, sales, and service? How do we focus on the experience and become customer-obsessed to reignite growth? Now, to answer these questions, again, we have the experts in the room. So I'm just going to kick it off. I think we have experts from banking, we have experts from insurance. Now, the lesson we learned from 2021 is that consumers continue to change. Now, how have you seen customer behavior change in the last 2 years? Maybe we start with you, Jen, if you want to share your experience in banking or just in general.
Yeah, hi, everyone. Yeah, so from an HSBC standpoint, in the last couple of years, I would say the biggest shift is a move towards mobile banking. The digital trends really changed, right? And like you said, it brought the future a lot closer. We had, 5-10-year targets on getting, 90% mobile banking active, and we hit a lot of those targets in many markets during the pandemic. I would say the other thing that was a big shift that we noticed about customers is a move towards mental well-being, health, and that part, even within the banking world. So looking more at life insurance, and I'll let Tom speak more on the insurance part, but just having a better balance of everything, work-life balance, and taking note to that. So I'd say those are the two biggest shifts that we noticed from a retail bank.
Okay. Tom, what do you think? Insurance?
Yeah, if giving some thought to the progression of the customer experience and improving the customer experience and the accelerated rate, I would say that there are three things that have kind of played a role here. First is just a very generic improvement across all industries. Let's face it, with people are used to different apps on iPhone or Android, making their life easier. The expectation is that that ease of the comparison with financial institutions and specifically with insurance, they expect the same type of ease. So there's been a general improvement that has been led not necessarily by the industry, but by keeping up with expectations of consumers as they see and they experiment with new ways of interacting with institutions. Second, very clearly with COVID, at every one of our touch points where individuals used to have a personal contact, there was a strong desire to minimize those contacts. So remote onboarding, non-face-to-face sales processes, any type of services moving from brick and mortar to mobile applications, claims processes where you try to minimize the amount of human interaction, whether it be for initial care under healthcare, such as inpatient, or just in the entire claims journey. So there's been a tremendous acceleration over the last 2 years, essentially focused on minimizing the human interaction due to COVID concerns. And I guess the third thing that's prompted an acceleration in 2021, 2022 is the fact that embedded finance, the ability to embed, for example, digital payment systems into our applications, into our sales practices, et cetera, actually helps to make the sales, it helps to make the customer journey and improve it. So the three things that I would point to are awareness that customers expect more and their expectations are growing every day. The fact that there was a real desire to cut human interaction and replace it during the peak of COVID with applications. And the third is that as the other industries pick up, such as payments, et cetera, the ability to embed that into our own processes to make it a seamless process for the customers. And that includes not only payments, but also, for example, APIs with our service providers, our hospitals, et cetera.
Okay, so there was acceptance, I guess, acceptance of really the whole digitalization of the journey, I think on the for the institutions, as well as I think for the customers to accept it. Because I mean, at the beginning, I think they were not really accepting of moving into the virtual or the digital, but I think the pandemic really changed that a lot. But going to you, Kévin, I just want to check with you, how do you see, you know, in terms of human content and technology, how do you see it converging in order to provide a seamless customer experience?
Hey, hi everyone. So how do I see the technology converging with the client experience?
Yes,
I think in the past few years through the innovation lab, what I've observed is really that I think COVID has accelerated the virtual fatigue. So clients gets tired to go online. We have an abundance of content available everywhere. So I think what is critical is really to capture data in order to really understand how best we can target and personalize content for the client instead of blasting content for everyone. That's something that I've really observed going through the past 2 years and through small experimentation as well. The critical factor is what is unique in the content that we are providing versus what they can find outside. So how we can differentiate ourselves against the competitors would be to learn from the client data that we have to personalize the service according to the history that we have with each client. And from a technology perspective, it has to be easy. I think we all want the clients to be self-serve, meaning that they will do all their activities, transaction on their own on the application when it doesn't suit everyone. In private banking, most of the clients are coming for the service and they expect a service with a human in the middle. So yes, we do need to equip the relationship manager in the middle in order to deliver this personalized experience, not only the app. That's something that we have observed as well. In terms of engagement as well.
So I guess what you're trying to say, Kévin, is that in a way, especially for private bank and private banking, and you're really right. I don't want to talk to a machine. I think I've earned talking to a human, right? So it's about augmenting that human to do a lot more and provide much more enhanced service. I believe Absolutely. That's an example of how you're doing that.
So the way to do it is, for example, I cannot mention so much on the name of the bank, but in terms of how do we equip the relationship manager would be to provide insights. Insights, for example, an event happened in the market. what is the impact on one relationship manager's book of clients? So maybe Apple is crashing in terms of equity. So therefore, what is the next best advice that the relationship manager can send to these clients impacted with this market events? This is really what we are focusing on from equipping the advisor.
Okay.
It's not only about using technology to deliver a cold advice to the end clients. There is emotions around investment decision. Therefore, we do need to keep the human in the middle.
Okay. All right. Okay. Julie, are you there? I think I see that you are still connecting. Okay, never mind. We'll come back to Julie in a short while. Maybe I'll go back to, and Julie is ready. Is Julie ready? Julie's not ready. Okay. When Julie's ready, I'll go. Then if you don't mind, I'm gonna disturb you a little bit because Alex is not here. Alex was supposed to join us as well to provide a little bit of input as well. Now, as we build next generation experiences, it requires thinking about new products, services, and underwriting and decision making to leverage existing and alternative data and new technologies. So we often see, I think I always say this, that, if you walk into a bank or if it's an insurance company, the only two things probably they don't ask you is probably your blood sample and your urine sample. And yet, you think that the service could get a lot better. So how is it that, what can be done? What new developments are you seeing in transforming underwriting? Because it seems like we're stuck with outdated data, risk models, credit propositions, and products that don't seem to align with what people need and expect. So what developments can we really look forward to? Or what's happening and what do you see?
Again, so I can speak from the banking side.
Sure.
I think one of the things that we're trying to do is not do, I think insights in general, when you see what the customer wants, we would, do these large PDFs, 200 pages, ask quant and qual questions, and then it's outdated in 6 months. So we've changed that. We've got communities in all of our key markets where we can get surveys out and results back in just a few days and really be updating everything we build now. Our tech stacks are very modular, so things can be built on top and things can be changed quickly. So I think in that regards, we are getting a lot better. In terms of data and like risk, we're going to keep those layers and questions, but we, mainly because we want to be a trusted bank, right? We want to stay and make sure all your information and maybe, even if your urine sample is safe, right? And that's the whole thing. You've got to keep it safe, and people want that, and they get frustrated from a customer experience. It's not always great, but at the same time, they want to know that everything you're doing, and everything you're giving them is going to be protected. So I think there's that level, even though it might not be seamless and, it's frustrating, even as an employee, as a customer, when they ask for information. I'm like, I work at the bank and I'm a customer and you can see it, but they still ask. It's a level of insurance that even if it's not the best customer experience, I think, it does make people feel more confident in that regards. So from, like I said, the insights, it's got to keep going. You got to be iterative. We've got to stay away from these large, customer feedback forms that do get outdated, and we've got to do them constant. So if we're building a proposition where we've got iterative testing throughout the entire, 8-month program. So what it looked like in the beginning will change by the end, because like you said, the customer behavior changes a lot. But with that, we've got to keep the risk team alongside with us, making sure that when we make these changes that we're allowed to, and that data is very valuable. Look, this is what the customer has. I think the beauty too is there's so many fintech players, health tech players, SureTech players that are doing this, and it's proven already in the market too. So we do a lot of benchmark studies to say, I know you're risk averse or you may not want to do this. The customers want it, and look, this product is out there and it's live and it's working.
Okay. I think I see Julie before I go to Tom. I was asking Jen about, how underwriting is changing, and a lot about it is about data, right? So data is foundational to customer experience and creating a seamless and friction-free customer journey. So the richer the data, the more contextual the experiences, right? So how are you leveraging data, to deliver new age customer experience, and even maybe, in terms of Again, going back to the whole underwriting process itself, right? How are you doing that? What are you seeing?
Okay. Yeah, so first of all, I fully agree with the statement that you've mentioned that data is foundational to customer experience and creating a seamless, friction-free customer journey. Yeah, this is because with data, we are empowered with great knowledge and about our customers. And this knowledge or information is something that we can transform through data science techniques and tools to scalable actions that will be impossible to do so if we do things manually. Right? So imagine manually going through millions of customers' records one by one to determine strategies to implement that will be contextual to everyone. So with machine learning and AI techniques, we are able to find patterns and groupings of customers that enable us to consume this very rich information into manageable information. So for example, we have next best offers and or propensity models. This allows us to transition from sending blanket communication to all our prospects to targeting customers who are likely to get other products. So how data science models work here is that it helps identify those customers who are most similar to the profile of those customers who have the other product. Probability scores are computed, and with these we can formulate campaigns that are relevant to our customers. This has actually worked so far for us, as conversion rates have more than doubled for products where we've implemented this concept on, and while we are able to deliver new age customer experience to our customers.
Julie, just to check, right? I think anyone that has data knows that not all data is clean data. Do you see a challenge in terms of that, especially for legacy organizations, that have been around for a long time? The issue of having clean data and then doing something with that. Is that? Do you see a challenge with that?
There is challenge in that, especially with legacy information and different formats of data. But it's something that we need to address in a way. But it's actually an effort that is worthwhile in a way, because you'll do that in terms of one-time effort, and then you'll have that clean data that you'll use for more studies in the future that will give you returns in terms of revenue and customer experience.
Okay. Tom, are you there? Because I don't see your video on. Tom,
no,
yes?
Yes, I am.
Okay, there you are. Tom, how can we change underwriting in insurance? I think I was doing, we just held a hackathon, and we were hoping to get solutions about, using alternative data, proxy information in order to change underwriting. And underwriting in insurance has not really changed much. What are you doing in this space? Anything exciting that you can tell us, or what are you seeing developing?
Well, I'm going to answer the broader question, and that is the data that we have available adequate and sufficient to support various questions? And some could be underwriting, some could be retention, some could be oriented towards cross-sell and upsell or customer lifetime value management. And I would say some of Jen had already commented that obviously asking your customers for additional information at point of sale or through adjacent to the process has actually a negative customer experience in many instances. So getting data through that process can be challenging, and you have to be careful how you do it. There are some tricks, such as changing your process, and by gently nudging, by reordering the process itself, you may be able to get some additional data while they're still. So asking for data pre-submission is better than asking for data post-submission. Very simple things like that. But in general, there's a cost in terms of customer experience to getting additional data. You mentioned yourself about acquiring data in an adjacency in order to support the process. That data could be from government statistics, from industries, from purchasing it from ecosystems, etc. And that is clearly a path in terms of augmenting data. So if you can ask 3 questions and then augment your data with APIs to health statistics, etc., then that is going to improve the customer journey dramatically. Now you have to pay for the augmentation, and you have to it may be difficult to roll that out across multiple different jurisdictions because sometimes those data repositories don't exist. And I guess the third, which has been touched on, which I don't think has been touched on nearly as much as it should be, and that is experimentation. We talk about building propensity models, right? But the data that we lack is really data about under what conditions will consumers behave differently, right? And so in general, if I want to minimize or balance the type 1, type 2 underwriting decision with regards to will the credit fail or will there be a claim based on the insurance? I've got a lot of data for that. I can augment the data, et cetera. What I don't necessarily know is what would be the customer's propensity to lapse the policy for a given price increase. What would be the customer's propensity to take up a cross-sell offer if it was made via the shotgun approach on SMS, if it was made via telesales, if it was made via post, et cetera. So what we do is we try to augment the big missing data for us is not necessarily the static or the historical data in terms of their characteristics. It's the behavioral data, how they will react. And so what we do is we design experiments. We basically say, if my goal is to increase retention, I'm going to design an experiment. I'm going to have a control group, which may have a different approach. I'm going to form a hypothesis about the effectiveness of, for example, SMSs a couple days prior versus SMSs after versus telesales follow-up. And each one of those has a very different cost profile. But I'll design an experiment, have a hypothesis, have a control group, run the experiment, see whether or not it reinforced my hypothesis or not, get the learnings, and then actually write down the learnings. Try to develop heuristic rules of thumbs. It's nice to have AI sort through a lot of things, but if you're trying to buy data about consumer behavior and propensities, you have to start with a hypothesis and you have to learn from the experiment at the end of the day. And I think, I don't think we do enough of that, but I think it's incredibly valuable.
And you don't think that that we don't collect as much behavioral data today?
That's because I consciously design experiments in order to test what connection with what activity against a conversion metric goal that I have. And I start those experiments with a control group based on a hypothesis. So for example, it may be, I believe that SMS shotgun will be low cost, but the net impact or the net conversion rate is going to be also low. So it may not be cost effective. And I compare that against telesales or something else. So actually designing the experiments, having a control group, having a hypothesis is actually quite powerful because you don't see that behavior. You don't see different propensities to go from one channel to another unless you have different channels open, right? It's not going to be in the data unless you have competing channels that are open to begin with.
That's true. And these are early days, Tom, these experiments?
No, we've been doing it now for about 1.5 years. And forcing the discipline of having a hypothesis and then gleaning out the lessons learned in terms of heuristics, right? So I always ask my team, what did you learn? What rule of thumb did you learn about the relative conversion capability of a human touch? And it's across the spectrum. I could have a branch person or an agent. I can have a telesales. I can have an email. I can have an SMS. You need to have some heuristic. When is it going to be profitable versus not in terms of whatever goal you're trying to achieve?
Very good. Anybody want to add to what Tom was mentioning, whether equally you are experimenting as well, and using those learnings in order to really customize the experience? Anybody would like to share? Julie?
Yeah, actually, I just want to add to that. Whenever implementing, let's say, new technologies, new models, it's actually very important to do some testing, in the sense that having a control, A/B testing there in place, so that we'll be able to measure more accurately the impact of the actions that we'll do. So we have that continuous learning that we can apply for future exercises.
Okay, very good. Okay, let's maybe just move on to the emerging technologies that are coming in. I think I came across a report by PwC, and they had analyzed about 250 emerging tech and shortlisted about those with the greatest potential in terms of business that they call the essential 8, which were AI, AR, blockchain, drones, IoT, robotics, 3D printing, and of course VR. Now, an example, of course, is like, for example, if you want to unlock value from AI, it will be a differentiator between those who win and those who lose. So organizations that are able to differentiate customer experience, I think Tom was talking a little bit about that. How do you use these technologies to differentiate the experience or the product? Now, can you share, anyone, again, it's open to all, how in your organization or use cases that you've come across, how you are using AI or other emerging technologies, in order to really revolutionize the customer experience? Jen, you want to go first?
Sorry, just going off mute. Yeah, so I would say AI, we have the typical ones with the customer externally through chatbots and the ability to have conversational banking in most markets. We always test internally as well. So the virtual assistant that's on my laptop is great when I'm trying to find things, directory, anything. So that's kind of one of the simple use cases. But right now we are experimenting with 2 vendors on building AI into the insights. Now, if you think about a lot of customer insight, because I look after the customer intelligence team, like I said, we're trying to own our own data and not have everything live in a 50 to 200 PDF that sits in a SharePoint or Teams, and then you use it in one meeting, and then the data dies with the PDF. So what we're trying to do is actually, we're working with some vendors right now, and it's really exciting, where they have an AI function and you can ask it questions and it goes and pulls out all the insight. And so it can read all of the documents and bring it together. And so this is a really exciting pilot for us to do. So you can ask, what's the buying behaviors of customers in this market around this type of thing, and it will search all of your documents and actually give you tables back and sources and all of that. And it's not anything new, but it's a great way for us to be able to reuse and reinvigorate some of that data. And then on that part, then you can start saying what needs to be updated and how do we keep leaving it, so feeding it and getting more out. So we're hoping it to be a really dynamic system. And then I would say, obviously, we in blockchain, one of the other ones, I would say, well, we've just bought, HSBC has just bought property in the sandbox. And so actually from a retail banking side, I look after the whole metaverse and what we're doing there. And so it's early days, but and everything I'm saying is public right now. It's definitely on the branding side, and teaming up how HSBC brands, especially in sports and everything globally. But that's going to be a really exciting use case on how we are engaging, understanding customers, being in technically another in the metaverse with them, and the type of insights we're going to get out of that is going to be really exciting.
Okay, wow, that I look forward to seeing a lot more about that. Kévin, what about what's happening in your space? What new tech are you experimenting with or already launched?
So already launched, sadly, none, but experimenting a few. So on the metaverse, we also had a project recently on having a virtual space for the clients to see where their philanthropy donation are going to. So for example, if an investment is done, not an investment, but if donations is done into a farm in Africa, they can follow through the development of this farm using the VR headset. So that's one project that we had recently. Then in terms of technology, a bit more maybe concretely executed was around onboarding to speed up the long form filling process and to connect with some data sources, really in order to have a more seamless type of onboarding process.
Okay, all right. Tom, what about you?
Yeah.
What are you
I'm going to make some specific comments with regards to AI, and then I'm going to make some very quick general comments about other technologies.
Sure.
With regards to AI, is just reinforcing what Jen had said. Obviously, OCR, optical character recognition, chatbots, as well as interpretation of pictures for claims submission has been implemented at various points. In addition, we also use AI in some of our SME businesses to go through public available information on the internet in order to sort out some criteria that might be useful. Within the actual underwriting and claims adjudication, fraud identification, we're experimenting it with AI, but I must admit that insurance at its core tends to be small data. We don't have the luxury of having a large ecosystem with lots of real-time data that would be sequentially updated almost real time based on emerging trends. So actually what we find is that for many of the processes, if we're not willing to fully automate it using AI is less useful than, for example, standard statistical approaches that may give you some weighting against a tree or give you some weighting as to why the model is recommending this. So transparency, especially in terms of the underwriting decisions, what are the criteria that seem to be highlighted such that you can communicate it to the client is actually better. And especially if you need to kick it as a red into a human underwriter, it's better than starting it from scratch to try and find out why it was kicked, right? So we've actually found that we've got more small data, and on these processes, until they can become completely automated, it may actually destroy the customer service, customer experience, rather than enhance it to the extent to which you can't explain your results and you can't follow up if there's human underwriting or claims adjudication necessary.
What is it, Tom, that's preventing us from actually automating the whole process? What is the challenge?
I think that when you're dealing with very critical decisions about whether to pay a health claim, right? I mean, which is anyway the moment of truth for an insurer, actually automating something and being willing to accept a type 1 or type 2 error based on somebody that's just come out of the hospital with an angina or a heart problem, I think you want to take your time with that one. Right. So I think that there are certain decisions where you want to take your time, and you may not be willing to fully automate it. So you may be willing to accept in retail cards or personal accident, small tickets. You may be willing
to. The first notification of loss, right? Very small value claims, right?
Yeah, I think, right. Yeah. Then I could see it, and then there, in fact, because there's less emotion and less value at risk, you may be willing to automate more regularly than in some other decisions.
Okay. All right. You wanted to mention about a few other tech as well, Tom?
Yeah.
You wanted to give your opinion?
Yeah, a few other the aspects. We're using drones both to underwrite and to track agricultural claims. We're also using
loss assessment as well, I'm guessing.
Absolutely, and get a little bit of pre-warning. We're also using it to do initial loss assessments on, for example, NatCat. So if there is a Gulf Coast or something, then going in and having a first cut is useful. Other than that, I don't see much. I don't see much in terms of blockchain in the insurance industry. No, I don't. And the Internet of Things. The Internet of Things has a lot of promise, but if it's only based purely on insurance, I guess the closest thing you can get is telematics. Right, and putting an Internet of Things into a car only for insurance doesn't make sense. So I think OEMs and I think Apple or your cell phones is going to have a competitive advantage in terms of that for driving, for example. So I don't see much in terms of blockchain and in the Internet of Things. It'll be interesting to see how that plays out.
Okay, Julie, anything to share in terms of the emerging tech that you are playing around with, or that you are noticing and quite excited about?
Well, actually, I'll answer this question in a different light. So with with all this emerging technology, but actually we also want to focus us because with this technology, there's actually a lot of new data that's being collected, and being able to harness that data, bring it all together to come up with a relevant offer that's actually alternative data that's feeding into our models that we haven't considered in the past, more traditional transactional data.
For example, Julie?
Yeah.
For example?
For example, we can talk about for mobile technology. Yeah, for instance, before it's just the transactions being done in the bank, but we are also looking at partner providers that can help us augment our data so that whenever we have models, we can actually have more insight into the customers where we haven't seen these insights before.
I think I came across for micro lending, trying to get data to provide micro lending is not easy, right? So I think I recall there was, this new player that was offering, what they were doing is they were analyzing telco data. So they were using alternative data. And based on telco data, what they saw was that, again, I think to Tom's point, they experimented and noted that people that have a number that they call regularly are better credit risk than people that don't. And based on that, so they did that experiment, they noted that behavior, and based on that, if you have a regular number that you call every month, you are a better credit risk. And I think for insurance, I believe in the US, I think if your FICO scores are good, they say that if your credit scores are good, it means you're a better, you take care of yourself better, you might be a better risk in terms of insurance as well. I'm not sure, Tom, if you agree if that's true, whether if your credit scores are good, whether you're a better risk from an insurance point of view, because they say that if you have discipline in credit, you might have discipline with health as well and how you look after yourself. I don't know. Is that something you've experimented with? I'm curious.
I think in general, it's recognized that higher FICO scores are at a minimum correlated with better frequency and better credit outcomes. I think that is true. Whether there's a story behind it and whether you are allowed to use that information in an underwriting process is currently under a lot of debate. So actually the ethics of using additional information, there's two camps. One camp would suggest that actually by using additional information, we may be able to broaden access to finance because we may not have the traditional. And there are other people say that actually, if you broaden it to the propensity to call one number or your credit score, you may actually be excluding some people because it represents a bias that is not necessarily reflective of the underlying. So there's a tremendous ethical debate at this point in time about what type of data you can use in your underwriting process and what type of controls you need to put in place on the data that you use for your underwriting process, at least in the States and in Europe.
Okay, all right. Julie, anything further to add, Julie, on the data piece?
Yeah, that's all.
Okay. Jen, I just want to, a big part of, I think, what the customers experience, especially for banking, is that whole branch experience, right? Walking into the branch, talking to a human, customer relationship staff or whatever. So I was looking at a report recently, I think it was jointly between Tim Ennis as well as the Economist Intelligence Unit that said that 65% of global banking executives that were surveyed said that branch-based banking will be dead by 2026. What do you think? Is that?
Yeah, I wouldn't say it would be dead. I would say banks in general, as well as HSBC, are not, opening more branches. In some instances, especially, during the pandemic, some closed and will stay closed, and that's across the board. But I think they're shifting on what's happening. So some of the branches, we're making them more experiential. So they're wealth centers, right? And you can go and talk to an advisor, and people want to not do that on a phone, and they want an advisor who can talk back. They don't want a chat bot, right? And so you do that. If you're going to go in and talk about $1 million portfolios and assets and all of that, you don't want to do that in a mobile phone, right? You want it in a secured place. You want to share secure documents and, assets. And so I don't think it will be dead. I don't think it will be gone. It will be different. It will be, there's health centers, there's experiments and things that I've seen where, you know, there are coffee shops that are banks, and, you know, that, so you go in and you're having a coffee, but at the same time, you can go and ask the question, because think about the waiting time, right? There's, you know, talk about family centers as well, which will be great. There's some new branches that just launched in Hong Kong, where they have stuff about kids becoming financial literate, so they can, you know, use their phone or a device or the passbook. I mean, I remember getting my first bank account and always having to put your little passbook in it. It would tell you your balance. It was so fun. And so they're going to try to bring some of that back. And I think the experiences are going to be much more in demand than what the traditional branches were doing.
And so, I guess more richer experience, right, Jen?
Exactly.
Definitely a much more richer experience.
Yeah.
Kévin,
and then,
what do you see?
There's talk about branches in the metaverse. We're not there, right? But I think some banks will experience that.
Okay.
So there will be, I think there's going to be a lot of change in that area, but I don't think in any regard you're going to, they're going to be all gone.
Okay. But not anytime soon. 2026 is not far off, but okay. Yeah. All right. What do you think, Kévin? Is the
branch in the metaverse is something that an innovation idea that came recently through the innovation lab, and because in private banking we don't have branches per se.
Correct.
It's really for retail, but still we have a client center in each of our offices to welcome the clients, and therefore this project was all around thinking about the next generation clients. How would they meet their RM? So would this happen in a face-to-face situation in the same way that it's happening today with the parents? Maybe. And this team was very inspired with the metaverse, and they created some mock-ups around having the digital portfolio managed in the metaverse virtually, 100% virtually. But it's just an experimentation.
Wow, sounds very interesting. Okay, so very early days. Okay, all right. Okay, I mean, now going back to in terms of how we look at talent and how are we preparing people, right? I mean, there's a lot of things happening. There's so many moving parts, and there's a lot of change happening. How should we be preparing banking and insurance professionals to match the creativity of the new tools, technology, and processes to transform customer experiences? Julie, maybe you want to start first?
Yeah, so it's actually inevitable, and for most roles, and more particularly to banking professionals, roles are continuously changing and evolving from past to present, and let us expect that this will continue to evolve. Yeah, so for instance, we are now in the fourth industrial revolution. Organizations across all industries are under more and more pressure to respond to customer situations more instantly, 24/7. So this includes the banking industry, which is constantly evolving. So this means that we as bank professionals, we should be flexible and agile as possible, so that it's imperative to stay updated in terms of what's happening in the banking industry. So in terms of tools, technology, and processes, so that we continuously transform the customer's experience. So take instance for the data community. So in the past, it's not there are a lot of new technologies right now that we are using to be able to process data and following and to be able to adapt with this necessary changes. We can continuously improve our processes and not struggle to keep up with this change. Yeah. So for instance, for the targeting example that I mentioned earlier, so we can start with doing next best offers, but we should also strive to improve this. For instance, in using other exogenous variables, so that we can not just be able to target customers based on propensity, but also targeting them in terms of the right moments in time, so that we can have more success in terms of implementing these campaigns from the models.
Okay. Tom, I just want to go to you. I mean, unfortunately, if you look at the sector within financial services that people want to most work with, insurance is generally somewhere at the bottom. And you know, while I think it's sexy because I think that we experiment with the most amount of technology, but maybe it doesn't come out across. So how are we preparing you know, our people for this change that is happening, and really to also, I guess, reinvigorate the industry, you know, and give it a new change the narrative around the industry? How are we doing that in a way, because roles are changing, technology that they're going to be working with is changing? How are we preparing people for this?
Yeah, I don't know how to make insurance sexy. It's not clear to me. That sounds like a Sisyphean goal, right? So it's not clear that that will ever be achieved in my lifetime. But I can tell you what I look for in a team, but preferably in individuals.
Okay.
I look for three things. First, I look for inquisitiveness. I look for always asking the question, yes, but why? Okay, but why? And what are the implications? So having somebody that's inquisitive, yes, but why can we do something better? Whether it's actually putting yourself in the shoes of the customer journey, whether it's actually designing an experiment in terms of gaining behavioral data, et cetera. So inquisitiveness, I value very, very highly within a team, but also very highly in an individual. The second is business context, right? So you have to understand the business. How do these tools, for example, get integrated into an underwriting and sales process? And what does it mean to ask like 3 questions or 5 questions? What are the trade-offs? You need to understand the business context. Also, the business context is important because if I can get a benefit in terms of customer journey by dropping a question, and it doesn't cost me that much, maybe 25 basis points in terms of my statistical model or my AI model, who cares, right? It could be a win-win. So I think you need to be inquisitive, yes, but why? You need to have the business context to be able to evaluate from an economic perspective. Does it matter? And where are we going to get the big, hairy, aggressive improvement as opposed to incremental steps are very important as well. But if there's a €1,000 note on the floor and all you have to do is bend over and pick it up, let's try and identify it. And then the third element is actually technically capable. You have to understand enough to be able to evaluate whether the tool that's being used is appropriate for the purpose that you've got in mind. And again, I go back to our underwriting process. To the extent to which AI, after 1 million simulations to come up with an underwriting decision that tells you nothing about why it was either green, yellow, or red, it's not very useful in the context of the business, which is an underwriting process where somebody has to deal with a human at the end of the day. So I look for inquisitiveness, business acumen, and tech savvy, and preferably all in one person. But otherwise, I have to build teams that actually have that combination.
I noticed, Tom, you didn't talk about agility. Why?
I think the inquisitiveness actually gets you the agility.
Okay.
But because yes, but why? If you're continually asking that every day, you're continually questioning what it is that you're doing.
Okay. I could ask, but I don't want to change. I don't know. I'm not sure.
Yeah,
so what you are saying is that it comes together. You're seeing it that it comes together as a package. Okay. All right. Okay. I just have a question about the operational aspects of it, because I think in terms of delivering a wholly enhanced customer experience, I think the operational aspects of it are really important as well. Now, how do we rethink the organization and reconfigure our business operation in order for us to really, I guess, you know, in the past few years, especially to regain some level of equilibrium and propel ourselves in the future? How do we need to organize ourselves? How do we need to reconfigure our business? Then maybe, shall we go with you first? At the retail banking side, what do you see? How are we reconfiguring our business operations, Jen? And how are we
Sorry, I'm working from home and my kids just came home, so I'm turning around the life of working in a hybrid situation. So sorry, how am I reconfiguring?
How are you reorganizing yourselves? Reorganizing yourself. How are you, in terms of the business operation, in terms of the organizational structure? How's that taking shape in order to deliver an enhanced customer experience?
Okay, well, I think some of that in terms of organization and changes are above my pay grade, but from a customer experience team, which I'm part of in retail banking, I think one of the things we're doing is really trying to find deep strategic, long, real value partners. So, before I think we had 40 agencies and consultants that we would work with. We're like reducing that number down and looking at value with them. So not we just pay them for an insight report and come back, but they become a specialist in an area that's important or a targeted area for us. So that's one of our big areas, building better relationships with our subscriptions and our insights. So we are not reactive, but we're more proactive around our customers' needs. I talked earlier already about, I would say, the communities we set up, right? And we call it Customer Studio, where it's internal and external, and we can, access, thousands of members anywhere in days with surveys and get results back. So we have continuous people that are on projects that we validate constantly with, and I think that's a new area of organization for the team, and a lot of testing. Like we used to do tons of POCs, and now we're actually going straight to pilots, and that's been great.
Okay.
And I would say the one thing that's been exciting that we're trying differently, and it's new, and I mean it's not really a secret sauce, so I'm happy to share because I think it is a best practice, is we work a lot with obviously fintechs, and that's my partnership role to because they have access to customer needs that maybe we're not thinking about. And so what we're actually doing with those startups is putting them in the insight front part, right? In general, you would go and get customer insight, you would build a proposition, then you would go and validate it, etc. We're actually working with, as part of the POCs, or working with the fintechs to actually help us create the insights, because they have live journeys. They have live, so if it's a payments player or like a shared wallet, or, they have these new fintechs that you can split bill payment, right? With roommates and stuff like that, or parents. And so there's these really exciting fintechs, but they know the insights and the usage and the engagement and the complaints. So
leverage on them, right?
Yeah, having them, the help techs and the mark techs be the insight driven people is a new way forward for us. And it's really, in the couple of examples we've done since the beginning of the year, it's just so eye-opening, rather than having a traditional agent, and sorry if you're any agencies on the call and listening in today, who just goes out and asks questions based off of a prototype, and that's, or a demo, and it's not live, it's not working. But all of these other companies, it is live and working. And so that's a whole different team that we're kind of building up right now.
Okay, I think I just saw a text, a chat in the chat that we're supposed to wrap it up. Okay, very quickly, I just want to get everybody's thoughts on this. I think in two different areas, right? One, if you could tell me, what development in customer experience are you most excited to see, that you hope, you're looking forward to seeing how it takes shape? And the other is, if whether you're from banking or insurance, what in your mind, from a customer point of view, what does that banker or insurer of the future look like? Your thoughts. Maybe we start with you, Kévin. Most exciting CX development that you're looking forward to.
So for me, what I'm the most excited about is to see how the next generation client offering from private banks will be executed. I think today we are still in this period where the parents are still the wealth owner, and the transition, the wealth inheritance will happen in the next few years. But today the model is pretty much more wired for the parents type of relationship. Then now moving forward, how will this be designed? We have experimented a bit on our side as well with through pilots to engage this generation, this segment as a whole, to better understand how they behave and their needs in terms of, well, investment perspective as well as wealth management. But we are still at the infancy. So for me, I'm very excited to see how this will progress.
Okay, all right. And how does the bank of the future look like from a customer point of view, look from outside looking in? What does that seem to you?
So to me personally, I don't have the answer. I think what I'm excited about is the tokenization of assets, looking at bringing the material world into the digital world. So a tokenization of real estate, for example, and how this will come on the portfolio as an investor. So today we see cryptocurrency is a big topic. Well, we also the crash of the Luna a few days ago. It's scary. Then moving forward, how the future of the wealth management will happen with these new digital assets. That's something I'm excited to see how the physical world will be managed on the virtual world.
Okay, Julie, what are you most excited to see in customer experience? What new development?
Yeah, so I'll actually answer your question in reverse. So actually, for me, in terms of what I see in the future, it's being able to